Hey, what's going on, guys? This is TerrenceRe. Uh, got another update for you today. I'm not gonna hold you, not gonna be long, but I promise to be strong. We're gonna talk about trading options, and the topic of the day is a put spread in WYNN. So the ticker symbol is WYNN, and that's Wynn Resorts. So basically, they have casinos or whatnot. And what happens is I have a little scan that I run, and this is one of the ones. I had others that popped up on the scan, but this is the one that I chose to do after I run it through some criteria. So basically, when you're doing a put spread, what you're doing is you're shorting the market, right? When you buy a put spread, you want the stock to go lower. If I were to sell a put spread, I would be wanting the stock to go higher. So let's talk about some of the dynamics of the trade, and then we'll analyze it as well and how it makes money. So first of all, like I said, I ran a scan came back, I chose win. What's the next thing that I do? I'm gonna come look at the chart. Once looking at the chart, as you can see, that WYNN is stretched out to the upside, right? You look over here to the left, you see right here, it's red, so that's letting you know that it is overbought. So not only did it come up on my scan, it's also showing that it's overbought as well. So if I were to come down here and look at some indicators, now you don't even have to do this, to be honest with you. I'm gonna show you a way how to mathematically, you know, determine that it's a high probability trade. But I am a technical trader, so a lot of times I like to look at the technicals. So I'm looking at it. If you look at it right here, you'll see this is a full stochastic. So on the stochastic, it is overbought as well. So so I'm looking at it on all these different levels. Even if you come to the weekly, it's overbought on the weekly. So which was another reason why I chose to do it. So on two long-term trends, it's overbought. And I want to say on the hourly, it's even overbought on the hourly on an intraday level, right? And so that right there said, okay, now I got a trade candidate. Now let's go and look to see how the trade is going to stack up when I get ready to put it on. What is my time frame? When I do these put spreads, because they're so stretched out, I want to be right around 30 days. But I can do anywhere between 30 and maybe 50 days, maybe 40, maybe 30 and 45, somewhere. The furthest I would have went out on this trade would have been 49 days. And I could have been anywhere between 28 and 49. So the sweet spot for me was 34. Now I did look at 49 days, but when you go out 49 days, the box is 5, right? And the box meaning just this area right here, the length of the spread. So from 120 to 115, that's $5. From their strike prices are $5 wide. But when I came to 34 days, they are $1 wide. So this is an expensive shot to the downside. Generally what I want to do is somewhere right by one in the money, one out of the money. I want to do something like that, or you can do one here. You can already see that I already have the strikes that I chose. I bought the 117 and sold the 115. Now, with that being, I paid for at the time, let's see, pull this up over here, and then we can see that I paid $95 for it at the time when I put it on. Now, what that means is if it's a $2 wide spread from 117 to 115, $2. So that means your initial risk is $2. If I pay 95 for it, that means I can make 105 on it. So it's almost about a risk one, bet one, make one. You know, I'm risking one to make one. So that right there is going to give you, just based off of that type of math, it should give you a 50-50 shot. You look down here, you see a probability of profit of 54%. And then you got a probability of getting 50% of max profit. So 50% of the 105 would be what? $52.05. Got a 60% chance of getting that. So you couple all of those things with a market that is outstretched to the upside. So you're stacking the math and putting the odds in your favor without looking at a chart at all. It's a 50-50 shot because the market can go up or it can go down, right? So without looking at the chart at all, you got a 50-50 shot. So now when you take that and we're saying that we're going to make this trade with the market stretched to the upside, with it being overbought on the RSI and on the stochastic, now we're throwing putting the technicals on our side as far as that go to be successful in this trade. And that's all it is. Once again, I'll run right through it and then we'll go over the analysis tab and I'm going to show you what makes it even more effective trade. Now, once again, you come down here, let's clear this one out. You buy one in the money. Let's see. You sell one out of the money. There you have an in-out spread. That's it. And you come down here and you can look at the numbers and it's going to tell you what your pop is, your probability of profit, and it's going to tell you what your probability of making 50% of max profit is, even higher at 63%. And that, you'll hear some people call that a put spread. You'll hear some people say a short debit spread, or excuse me, a long debit spread because you're buying it. So you may hear that, or you may hear like a in and out spread, a bearish in and out spread. And all that means is just one in the money, one out of the money. So let's clear this up. Now what I want to do is, let's do this. Let's analyze this on the analysis tab. So we're going to go to the analysis tab, click up here. Now, what you're looking at now is you see the spread on here, right? So I'm going to bring this back over here. And what we're going to do, I'm going to click analysis over here. Now, as far as I know, this is the only platform that you can do this on. Do it in this particular manner. I know that you can analyze on other platforms, but the way Tasty Trade has it set up, it's a whole lot easier to use their analysis tab. So let's look at it like this. We're at the market closed at 115. Let's say 110. Let's say the market by Monday, which is March 6th. Let's say I clicked on theoretical spot price. We're going to put 110 in here. Now I can come right here and click. That'll give me $45. Now remember, I just want to make 50%. So let's say 109. Let's say if we get 109. 109 is going to put me at $50. $50.91 theoretical. That's the theoretical price. So basically down $7.83, and that's by Monday. Now we don't have to have that move by Monday. Let's say we could go a week out, but I just want to show you. Matter of fact, we'll go out to, if Monday is the 6th, so we'll go out to the 10th, which would be a week. So we'll give it a week. And if it's out there within a week's time, we'd make $53.57. That would be our 50%, right? So we would need it at 109 by next Friday. Now, let's go back to the table. the option tab, and let's look at probability of touch. So I'm gonna come over here and hit touch percentage. What is the probability of touch? Now this is in the next 34 days. I got a 60% probability of touch in the next 34 days of it touching right here. So this is what you will call that lets you know you're putting the math in your favor. And it's well within the expected move. So it's a good chance that we could get. Now you couple that with the market being to the upside, right? Being overbought on the daily, the weekly, and an intraday. And if you couple that with the probability of touch, that we have a 60% probability of touch in the next 34 days, we've set ourselves up with a high probability trade to be successful. And at that point, once you're successful, you find a successful form of trading. You just want to continue to mimic that and keep doing the same thing over and over and over again, repeating this success. So, hey guys, if you got something out of this, hit that like button, hit the subscribe button. Now, what I do, if you want to support the channel even more and join for $9.99, when I do trades like this, I automatically send them out to the members of the channel. Trades that I do. Now they aren't recommendations, but that's just my way of showing you the stuff that I'm in. So this particular trade I did myself, and if you would like to follow it, be comfortable with your own risk. This is something that is relatively cheap. It cost me $95 per contract. I only did one contract. Now, if you want to do more, that's up to you. You want to have a large account, you can do 5 or 10, but just be comfortable with the risk. And so with that, guys, I'm gonna be out. Peace.